All right, so the Fed cut rates by 25 basis points today, widely expected. We've been looking forward to this since August the 1st when the market started pricing it back in. We got it. Now what? Right now, what's the market going to do? What's the dollar going to do? What are bonds going to do? We'll break that down. We'll also take a look at technology sector was not very good today. Semiconductor stocks, mainly Nvidia, dropped because of some bad news that they got from China about buying their chips. Fortunately for us, market outlook from previous trades, the semiconductor trades that we've done in the past, they both did well. So that's kind of nice. And then breadth, had been really shrinking the past few days. It expanded. We'll talk about what outperformed and why. So let's break it all down. Today is Wednesday, September 17th, 2025. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, so the big story, of course, was the Fed meeting, and you can see we actually had a pretty decent sized range today, above average. We were down, but only down by 0.1%. And so the market forecast still remains pretty strong. Short-term sentiment's pretty mixed. You can see the near-term line down because of the loss. The momentum line up because of the move off the lows intraday. But that's a different picture than what we saw with the Russell 2000. When you look at the Russell 2000 here, it rallied immediately. It was up almost 2% right after that cut. But then after the press conference was over, pretty much gave up almost all of those losses. It was only up 0.2% by the time the market closed. A near-term line down, momentum line in bearish territory. So a little bit different picture. Last time we had a long upper shadow was last November, going into the last cut, coming after the second, and then going into the last cut before the Fed stopped with the cuts at the end of last year. So that's kind of the main reaction the stocks had. Let's take a look at the different asset classes and how they performed here on an intermarket, because that's what really matters the most right now is these intermarket relationships. And you can see the two big ones were the dollar. The dollar initially sold off on the announcement, the cut, but you can see finished, rallied up by the end of the day. Initially, bonds rallied right after the cut, but then they sold off by the end of the day. So by the time all was said and done, yields were up on the day, and so was the dollar. And that's the picture we got at the end of last year. Yields were up. Remember, you can see coming off of here, the day before the rate cut, September 17th, that was the low point for yields, and we rallied into the end of the year. You can see so far a pretty good bullish move today, up 5 basis points, but off the lows was like 7 basis points. And then, of course, the dollar also rallied. Like last year, again, it set the low point during the cuts. It rallied into the end of the year, and we had a pretty good move today. It didn't completely offset what we saw yesterday, but pretty good move off the lows of the day today, as the range today, we closed near the highs, and the range today at 0.85 points was big, actually bigger than the range yesterday. So the only reason why we didn't completely reverse yesterday is because of the lower low immediately after the Fed meeting. So you can see the MACD and stochastics are low, and it could be setting themselves up coming off of this 52-week low for a new move up to the upside. Again, that's all great as long as commodities don't also move up. If that's the third leg, you can see it was down today, filling in the gap. That's the positive sign. If we can get the dollar and yields to go up and commodities to fall, that's our picture perfect scenario. Now, I also mentioned that Nvidia had a problem today, and you can see that a little bit here on the 3-month chart. But from a sector rotation standpoint, the technology sector struggled. And it was actually struggling well because this news came out overnight. So it opened up down, discretionary opened up down. They were the biggest losers, down over 1%, right immediately after actually, it was not necessarily immediately after the Fed decision. It was kind of after the press conference, kind of in the middle of the press conference. Then the market turned around and rallied higher. They still ended up underperforming the market along with industrials, and you can see everything else. Financials really benefiting from the higher yields. Everything else struggling, right? Staples. These are all sectors that when they outperform the market, that's not the best sign. It's one thing for them to go up when the market's up, but usually they underperform the market, right? When they are outperforming the markets, that's usually associated with weakness in the market. So this most likely, hopefully, will be a temporary factor. The breadth was really poor last year after the Fed started cutting rates, and ultimately led into the correction that we had at the beginning of this year. And so we'd like to see There very well could be continued weakness and breadth going into the rest of this year. And again, that will create some choppiness. Most likely, it will create a 5% decline by the end of the year, if not another one towards the beginning of next year, during the seasonal times of weakness that we tend to get that. And housing really was one of the bigger losers, again, because of the rising yields, right? If yields rise, unfortunately, that will actually act as a detriment to a sector that's been pretty strong here lately and might start to give back some of those gains. For an example, if I were to go to the zigzag chart, you can see this sector as a whole is up about 17% off the last 5% decline. And now is almost down 5% as the market has been anticipating and now has gotten higher rates post first rate cut. All right, well, that does it for our Market Outlook preview video. If you want access to our Market Outlook blog posts that we do every day for free, for anybody, any free subscribers to our website, click on that link in the top right corner of your screen. That will take you to our site where you can subscribe. It will take you to our Market Outlook blog post where you can there subscribe for free and get access to the full blog post. Dives into detail, great detail about what happened today, why that matters, and what we should expect to see going forward. So make sure you check that out. You also can get access to the full version of the Market Outlook video. If you click on that link there, all of our subscribers get access to our Market Outlook full video, including our foundation members. So our foundation tier starts at $29 a month. Again, you get access to the full Market Outlook video, the trades that we do during the Market Outlook video at the end, the Market Outlook Live, where we actually put on those trades before the market closes and then manage existing trades to see when we should get out of them, which obviously is the most important thing, right? Anybody can tell you when to get into a trade. Not everybody tells you how to manage them and when to get out of them. And then we also track the results. You get access to our trade tracker. We track the results of all of our Market Outlook trades. So all of that is available for our foundation tier. Again, you can click here to subscribe to that for just $29 a month. Thank you very much for watching. Have a great rest of your Wednesday night, everybody, and we'll see you all tomorrow.